Hello. Hello, good evening. Welcome to March's Financial Education webinar series. Fortunately, I am not the host this month, but I have a special friend of mine for this series this month that's going to be the host. We have a lot of great content today, and today's topic is, are you ready to file taxes? You know, there's a quote that they say two things are guaranteed in life: death and taxes. Ugh. I know, morbid, but I promise we're going to make sure that this webinar is fun and that you learn a lot. Before we get started, I wanted to explain a few things. Next slide. Zoom accessibility. As always, CSD Learns provides interpreters. We have voice interpreters for this evening, so make sure that the audio is turned on. Also, if you need caption, we do have CART being provided. At the bottom, you'll see the icon with a CC, closed caption. Click on that. The best way to watch this webinar is on a desktop device. If you're using a mobile or an iPad, you probably will struggle. Next slide. Also, for maximum viewing capability, we suggest clicking gallery view. Make sure that your Zoom is in full screen. And we will also be using a PowerPoint tonight. So know that you can take advantage of adjusting the screen size so that you see the presenters larger than the PowerPoint originally. Lastly, if you have questions that you want to ask to the panelists or questions directly to the host, please use the Q&A box. The host will see your questions and will be able to answer that question live on camera. If a lot of you thumbs up +1 to that question, the question will rise to the top of the priority list so that it would get answered first. If you're struggling with your Zoom experience for whatever reason and you need tech support, use the chat box. We have 2 tech support people here with us this evening. You'll see tech support 1 and tech support 2. So you can ask them for assistance during the event. Next slide. As always, we are extremely grateful to Wells Fargo Foundation for providing the financial assistance to help us host this event and provide content and education for the deaf community for all to watch. Thank you again, Wells Fargo Foundation, for your support. Next slide. Now I get to welcome our special guest host for this month. I'm not guest, host for this month, Roxann Richards.
Hi.
Hey.
Hi.
Wow. So, yeah.
Yes, I am so excited to be hosting this event, and I'm looking forward to seeing how the workshop goes tonight.
Oh, for sure. Agreed. I am really excited to have you here. And I know you have a lot of knowledge to share with us in the community. And happy International Women's Day and Women's Month.
Yes.
Quick question before we jump on in. How is it that you got motivated to learn about finances or money in general? Like, what got you into it? What got you motivated?
Well, when I was younger, I wasn't really sure what I liked, but I knew numbers and math. Numbers, they just made sense to me. They were black and white. There was no gray area with that. Whereas English, thinking about rules and the flexibility of rules, numbers were just very clear to me. So numbers worked well in my mind. compared to other things.
All that other stuff gets jumbled up in there. Numbers confuse me though.
Exactly. So I was familiar with the content and I was able to explain it well in ways that people could understand. But if we were looking at English or other topics, I was like, wait, can we get that again?
I think I'm the opposite. English is good for me, and math is like, what? Huh? That's why I pay people to handle my numbers. Speaking of paying people, I know it's tax season, and a lot of the audience might be looking to hire someone to take care of their taxes. So, without further delay, you lead the show, Roxann, and see you at the end. Enjoy.
See ya. Hello, hello. Tonight, I want to discuss the topics for this month. We can go to the next slide. So, as you can see, we have 4 Tuesdays this month, and clearly the focus is on taxes for tonight. The next one will be real estate. And on March 23rd, we have cryptocurrency. And the last one will be personal finances. So every week we'll have a different focus. Next slide, please. And of course, it's the perfect time to discuss taxes. We have March and then April. What a headache, tax season. Next slide, please. Oh, wait, I thought taxes were due in April this year. So maybe you all weren't aware, but last year COVID impacted us greatly in different ways. So before last year, taxes were due in April, and then it got extended. And it was due on April 15th. So we assumed that COVID would be gone by this year. And so many states like Virginia, Mississippi, Idaho, all decided to delay to July 15th. So maybe you can research whether your state has provided an extension to July 15th. And maybe you're wondering what's next. So let's take a look at the next slide. So taxes is where I want to bring in deaf tax professionals who know all about the numbers. So let me introduce Magaly Morales. Hi, thank you for joining us. And now let's have Masha Lashun join us. And last but not least, Pamela Richards. Can you join us on screen?
Hi.
Thank you all so much for joining us for this discussion about taxes. And for those of you who are watching, you should be looking at their names to see what states that they're working in. I would like for you all to introduce yourselves a little bit. Magaly, would you mind starting? Hi, my name is Magaly Morales. I'm in Region 5, so I cover Florida, Georgia, Mississippi, and Alabama. So those are the 4 states that I am working with. And it's my first time as a deaf tax preparer, so I'm really excited. And Roxann says, thank you for joining us. Masha, would you like to go? Hi, my name is Masha.
My name is Masha. I'm in Region 9, and Texas is huge, and I only have Texas. So this is my first time working with DeafTax, and I'm really enjoying it.
And Pamela, can you introduce yourself?
Sure. My name's Pamela, and my name sign is a P across my forehead. And this is my second year with DeafTax, and I am Region 4, Tennessee, West Virginia, South Carolina, North Carolina.
Masha, so you have Texas, which is a very big state. Um, I'm curious about taxes in Texas. Can you elaborate more on that, Masha?
Oh, sorry. Texas is huge, and there's so many people. Other states are very small, and so we decided since Texas is so darn big, I'm in charge of Texas.
So do you have, a great deal of work, or is it, about the same as everyone else? Magaly saying my workload is about average. I'm able to manage all of my states pretty well. And Pamela, what about you?
I wouldn't say there's a lot, but I do help out with the other states. So I'm not just only in my region, but I help in other regions as well. I'm hoping that the amount will grow, though.
And Roxanne is saying maybe more people will be reaching out to you for support, Pamela. Can we
Yeah,
go to
that's
the
the
next
hope.
slide?
That's the hope.
So we have some questions for you all, and let's see what they are. Are you ready?
Yep, yep. Ready.
Are you excited?
Stoked.
Okay, next slide. So maybe some of you are younger viewers and you are recently getting involved with the tax season, and you have this form called W-4. What is withholdings and why do they matter? Can any of you answer that question for us?
Sure, I'll answer. Withholding is, well, you're required to withhold something. The number one entity that takes your money is federal. After that comes Medicare and then Social Security. That's deductions from your paycheck. But federal, we need to pay the most attention to our federal deductions. And on the W 2, that is very important. We need to pay attention to what we put down as far as a withholding there.
Okay, thank you for mentioning that. We will get to the W-2 shortly.
Oh,
Um,
perfect.
so my next question for clarification, let's say I just started working and I'm a dependent. Do I put down 0 or 1 for myself? What do I put down? Because if I put down a certain number, I owe a lot of money. So I'm not sure, 0 or 1. What's the difference between the 0 and the 1? Can anyone answer that question? And Magaly is saying the 0 tends to mean that the federal taxes that are being deducted will be refunded later next year, for example. Whereas the 1 is you may owe a small amount of money. So the taxes in your job, you want to use that form to decide how much taxes is deducted from you while you're working. And Roxanne is saying, so if I'm married, do we both put down zeros, or if there are children involved, do I still put down 0 regardless?
Uh,
Pamela, do you want to answer?
yeah, I can answer that. A zero or a one, that it's not that way anymore with the new design. There's a new design that started last year or in 2019, I believe. And basically it asks you questions. There are three different sections of questions. It asks you if you're single or married. It asks you if you have dependent children. It asks you if you would like to increase any deductions. It asks you about being self-employed, because usually self-employed doesn't have any deductions. So you fill out those three portions and you come up with the answer. It's not just a one or a zero anymore, just so you know.
Wow, that's new. That's new knowledge for me because I've been working for such a long time. I don't know what the new rules are. So that means I need to pay attention more. Okay, and ask those questions. Thank you. Thank you. That's Very helpful information for me. I'm, older, I'm 39, but still, I learned something new. Next slide, please. So some people received a W-2 form or a W-4 form, whatever form we're talking about here. And we're wondering what kind of documentation we should be adding to fill out these forms. Anyone can answer that? What should we be filling out for these forms? Magaly is saying, so we have tax preparers and we tend to provide them with um, our documentation, 1099, our ID cards, independence, W-2 form, 1099-G for unemployment that you might have received from the government. Oh, Roxann is saying, can I clarify? The 1099-G is only from the government? Magaly is saying it's for unemployment. So you receive that from the government. So for example, during COVID, there are some people who received that form because they didn't have a job. There are some people who are registered under companies, whatever their reasons may be. There are different types of forms. So any IRS letter or form that you may have received, it's important to bring those to your tax preparer as well.
I was just gonna chime in here too. 1099 NC would be like if you forgot to, sorry, if you're a driver like Uber, you need to have that information because you still can owe. A lot of people don't realize that 1099 NC is needed.
I'm curious. Okay, the 1099, any 1099 form, do you suggest that um, we also have like receipts for repairs, for gas, any of these other types of documentation we may have? Do I need to have those with me? What happens if I don't?
Um, So, if you don't have that documentation, we can make some assumptions, but it really is better for you to have record of that. So, keeping those receipts. If you're self employed, you really do want to record your miles, and it's a lot better to do miles than do actual expenses of what you've spent on your car. The mileage deduction goes a lot better. You end up saving more, so therefore you owe less taxes than using actual expenses. Now, your phone doesn't have anything to do with your car. You can put in your actual expense on your phone. So there's a whole section for your car as a self-employed person and another for your phone. The car, you have a choice to put down your mileage or you can put down your actual expenses, what you had to pay for tires and gas and etc. for your car. It's interesting how it works, but mileage usually is a better deduction. Now your phone, if you have to use your phone for your job, say you're a rideshare driver, then you're going to deduct the portion of your phone that you use for that. You'll understand a little bit clearer as we go down through the slides, and we'll talk about repairs versus maintenance.
Okay, so my friend who works for Amazon mentioned, um, well, never mentioned their phone. They use their phone. So should they be documenting their phone use as part of their 1099?
If you use your phone, does your friend use their own personal phone at Amazon as part of their job? It's part of their job, then yes.
Good question. Okay, thank you. That's good to know. Good to know. Thank you. Next slide, please. Okay, so that is what some people were a little confused about. We have these boxes here, and someone gave me this form, and I'm just going to need some explanation on what the W-2 form is.
Uh, I'll I'll take that. A W-2 is the most important is the most important box is wages, and the second most important box is the federal amount deducted. We want to pay attention to the wages earned because that's how much you've earned, that's your income, and your taxes are based on your income. The number two box, federal, how much has been withheld throughout the year, determines if you're going to owe the IRS or if the IRS is going to need to give you some money. So the number one and number two are very important.
Anyone want to add anything?
Yeah. Checkbox number 13 for retirement plan. Sometimes it's checked, other times it's not. So you want to make sure that you pay attention to that. It's a little tiny checkbox. It gets, retirement plan, it gets missed often. And so there's some people in Texas who don't even see anything there on the state. I just want to mention it so that you don't forget it. Different states have slightly different things.
So box 13 can be empty.
15.
Magaly saying 15. 15
Oh,
and 16.
15 is state. If it's blank, some states have items that they put in there, other ones don't. So it depends on where your tax preparer is from. Watch for the state.
And Magaly, sorry. Magaly commenting, yes, as Masha said, those boxes that sometimes have information and sometimes don't. I can give an example. Florida, we don't have an income tax. There are other states who mostly have income tax, but there are few that don't. So we have to watch for whether our state does or not. So we have federal tax and we also have state tax. So there are a few states that don't have state tax, and that's the reason that those boxes can be empty. Those are 7 states. So in those 7 states, you want to watch for that because those boxes might be empty. Roxanne says, so if we don't have state tax, that means we don't pay a state tax. So for example, in Illinois, we we have the concept of, we don't have the concept of state tax. In Delaware, so we don't pay state tax, correct? Pamela?
The federal box. Sometimes people see that it's a decently high amount in federal and expect to get a good return, and they don't. But that's because there isn't very much in the number two box. It all depends on their job and what their job is deducting. Sorry, I wasn't very clear on this. Some companies, if you hadn't filled out a W-4, they aren't deducting anything for you. They just make an assumption on what deductions to do for you. And when it comes time to file your taxes, there are taxes that you haven't paid, and it makes it so that you owe. So you need to tell your human resources or payroll department to make the appropriate deduction for federal. A lot of people don't realize that box number 2 is really, really important.
So can we self-advocate for, honestly, if we didn't know, if we were naive, what can we do?
The IRS doesn't care. You still owe them the money.
Masha, you had a comment?
Yeah, I was going to say most of the time companies will deduct, and 0 actually deducts more than a 1, which is interesting. 1 will make it so you have more money in your check.
So what about people who don't want to put down a 0 because they're trying to maybe save money throughout the year? Or do we go ahead and put down that number knowing that we'll have more deductions, which means I will have less money to spend throughout the year? Any advice on that?
That's tough thing, if you're struggling to with money. It's hard, but it is the law. You have to pay the IRS. I guess you gotta figure out a budget.
Okay, thank you. Just a little bit like, well, too bad. It is what it is. I've worked too hard for this money for the government to just take it like that. And then the IRS saying, give me my money back. So, okay, whatever. Thank you for sharing that. Let's go ahead to the next slide. So, we just discussed the 1099s a little bit, but it would be nice if you can remind us. I have the 1099 NEC, I have the 1099G.
There's G, yep, 1099G, and C.
Okay, NEC, got it.
And
Magaly is saying you also have the 1099 miscellaneous. Roxann is saying, so those are the three most common: 1099 NEC, 1099G, and 1099 miscellaneous. Are those the three most common?
no.
10 Magaly saying 1099 NEC is very new. It just came out, and that replaces the 1099 miscellaneous, which was used for other reasons. So typically you'll see the 1099G for unemployment. And Roxanne is saying, so we see a lot of that now due to COVID, right? 1099G. And Magaly says yes. So we have the 1099 NEC, and we have the expenses that are documented. That we have independent contractors, for example, Uber drivers, Lyft drivers, Grubhub, and various others who earn a lot of money, but they owe a lot of taxes to the government. So it's important to track your expenses. And Roxanne is asking, what expenses? Magaly saying mileage, for example, any repairs, phone use, electric bills for like a work office in the home. Those type of expenses are important. Roxanne is indicating. Pamela, do you want to expand
Yeah,
on that?
the 1099 NEC is basically for self-employed. It's very different than a W-2. W-2 is an employee. You work for a company. You're being paid by a company and they take out your taxes. 1099, they don't take out any taxes. Therefore, you have to pay taxes. You're going to have to pay more taxes. 1099 always, oh, they never get money back. They never get money back. That's the con of being a 1099.
And Roxanne is asking, how do we prevent that?
Well, if you have another job that you have a W-2 or W-4 for another job, you have a higher deduction there that will help offset some of the taxes that you owe as a self-employed person. If you don't have another job to offset it, unfortunately, you're going to owe.
Roxanne is saying, so we need to figure out the percentage of money that we need to save.
Yep.
Is that what you're saying?
Put money away. The IRS lets you pay. You can pay to it quarterly or monthly to make it so that you don't have such a high tax bill at the end of the year.
So is that similar to interpreters who quarterly they pay taxes?
Yes. Quarterly. This is Masha. There's a new form that's called 101, a 1040 Easy. It's got 4 vouchers that you're able to pay. You then don't get a penalty. Because if you don't pay, you end up getting a non-payment penalty. So this makes it so that you can pay it without having any penalty. You say you pay $2,000 every quarter or $4,000 every quarter. It makes it so that you don't have a penalty. There are options.
Roxanne here. And how do we figure out how much we should be paying quarterly? How how do we calculate that? Is there a specific percentage, or what is your advice?
Well, there's two ways. You can look at your what your total income is and figure out a percentage there, or you can base it off of last year's and then divide that out over 12 months. So basically, last year's or your income.
Okay, interesting. Let's go to the next slide. So I'm single, so it's easy. But some of you in the audience might be head of household and married, filing jointly. So, what is the difference between those options? Can you explain both of those a little bit more? Anyone? Anyone?
Let one of
Magaly here. Magaly here. So, head of household means that you file and you have others under you. They could be children, they could be adults, and you use your income. Typically, it's under a certain amount that you're using to take care of children. Married filing jointly, husband and wife, they are filing together. They file their tax returns together. And that's called married filing jointly. Children also would be included in that tax return too. So, head of household is typically a single parent or a person who is an adult with no dependents. So, you have to consider each situation and make a determination of how you should file. Roxann says, this leads me to the next slide. Can we show that slide? So, we have different amounts here. If I am the head of household, and let's say I'm taking care of my mom who's a senior citizen, should I be expecting that $18,650 as part of my salary, or what? How does how do those numbers work?
So the standard deduction,
Standard deduction. Okay.
yeah, the standard deduction means that times your income. So you have the standard deduction, and that would be the deduction from your income. And then, yeah, you deduct that from your income, and then the IRS is like, okay, here's the rest.
Okay, that seems pretty simple. Next slide.
Hold on. Before you jump to the next slide, there are two different types of deductions: the standard deduction or itemized deductions. The standard deduction is what you were just talking about. Itemized deductions depend on the situation. There
What's
is
the
a difference
difference?
between them. You see that 12,400 for a single as a standard deduction. Itemized is for if you are going to be deducting over that 12,400. If you're less than that, you just claim the standard deduction. You don't get to choose, you don't get to opt for both. You have to choose one. So if you, yeah, you might owe still with the standard deduction. The itemizes, you have to count all of them, and it has to go over 12,400.
Hey, Magaly. So when we're filing tax, we have to make sure that we have this documentation. So we have these numbers here. It's you still never know. Some situation could happen. You never know. So this is just a guide. Roxann is saying, okay, next slide. Many people are unclear. Let's say I'm a teacher and I spent a specific amount of money for printing or other materials or car, electricity. How I've tried to help save the environment. What should I do to save money? Any responses to that question?
Okay. Magaly, you want to respond?
Okay, so sometimes we overlook deductions like charitable donations. I think it's up to 300. Sometimes we miss that. Medical expenses, mortgage insurance, different standard deductions that we tend to miss. When we donate to nonprofit organizations, for example, like churches, we have up to 300 allowable for that as well. So we should save those receipts. Roxann is saying, so even if it's a small amount, we should still get the receipt. Don't just think to let that go. What is that correct, Pamela?
Remember when I was just recently talking about the standard deduction versus itemized deductions? Donations, like Magaly was just talking about, go under itemized. The standard deduction, you don't get to take that. If you took the 12,400 as a standard deduction, you don't get to itemize, which therefore means that you wouldn't be able to have the donations written off and that kind of thing. Somebody was just talking
Okay,
about
donating money. Donating money. Magaly, you just talked about charitable donations.
No, there was something else we were talking about. I can't even remember. Sorry. Yeah, I don't remember.
Nonprofit
I was saying
organizations.
one thing, but like, yes, medical prescriptions, um, medical items. If that goes over the standard deduction amount, then you can write those off as itemized.
Okay, let's go on to the next slide. Thank you. Okay, so this is also very common. Identity identity theft. That's a hot topic, identity theft.
Um, Go ahead.
Masha?
Yeah, it's popular right now. My mom was actually a victim of this. Somebody filled out some checks in her name and stole her identity. Yeah.
Oh, wow.
Masha, um, that's adult, but I'm noticing this is very common with children too, which is concerning. It's a lot more concerning. I mean, it's higher than adults. I don't know why people are stealing other people's identities. It's really bothersome to me. Yeah.
So with identity theft, we can't just apply for relief, financial relief, right? It seems that there's a technicality there, and it seems to be like there's easy access to our identities.
My suggestion is get some identity security IPP.
So IPP, okay, nice. That's good to know. We have one more comment, Magaly, and then we'll go on to the next slide. Magaly is saying, be careful about throwing out papers. Keep those papers because those documents are important. Keep them and then shred them. And that's one way to protect your identity. Roxann is saying, right, okay, so we need to save our documents. So I know with COVID, we had stimulus checks, and I'm wondering, do we have to pay those back? I know a lot of people have questions about that. Are we taxed on our stimulus checks?
Okay, the stimulus checks are not taxable, period. Not at all. So whatever you get as from the stimulus check, that's the government is giving that to you for assistance. You will not be taxed on it.
Roxanne is saying, okay, let's go ahead to the next slide. So sometimes I'm not sure what items affect my taxes. Say I invested in a house or property. Does that affect my taxes?
Okay. So, no, go ahead.
Magali is saying, I think there's a form. People don't realize it that 1099G um, also goes from the federal government. So a lot of people don't realize that information is on that form as well. Roxanne is saying deductions or what exactly? Magali is saying information for taxes. So let's say uh, it's just becoming popular for people to pay back the 1099G. Roxanne is saying that's interesting. We have like 10 minutes left, so I want to still save time for the Q&A. So let's go to the next slide where we talk about past and current filing procedures. So we have electronic filing, and some people still prefer hard copy paper filing. And direct deposit is also another new
Um,
concept.
my opinion is filing electronically is more safe than paper. Paper takes longer. Your check could be stolen in the mail. There's a bunch of different reasons why electronic is so much easier. You know, I think for the IRS, their goal is to go paperless. I believe they want to go paperless and do it all electronic, but I've noticed that people do still use paper. I
Hmm.
used to work at the IRS and I noticed that people who use paper seem to miss things. They have credit. Yeah,
Credit. Okay.
credit that they miss. For example, EIC, like they would have to go and find that somewhere else to get it. But if it's online, if it's electric filing or electronic filing, it would be there automatically. Things are missed less with electronic filing. It's got the credits already on there and asking you about them.
So it's almost like getting your money back immediately versus waiting for a long time to get it back. That makes sense. So technology is better. Now let's get to the fun part. We're at the question and answer. I see you out there. So we have 7 questions. Y'all are hot today. So one question that we have in the chat box relates to retirement. People who are past the retirement age and wondering if they can afford taxes. And how do I know if I owe?
So I've noticed that retired people usually owe because,
Why do they owe?
yeah, they're not having it deducted from their paychecks anymore. They're using their retirement to pay for things. So like if they had a Roth IRA, then they're lucky they don't have to pay a Roth,
One second.
ROTH. Yeah, a
Roth.
Roth IRA is it's a type of retirement account in which your taxes are already paid. Now, if you don't have a Roth IRA, you're going to have to pay taxes on what it is that you take out of your retirement, which has actually taught me I much prefer to have a Roth. I'm going to pay my taxes now on my money rather than later.
Okay, that makes sense. So human resources departments typically warn us about that? Because that hasn't
Some,
been my experience.
yeah, some companies don't provide that. If your company doesn't have a Roth IRA, then what you do is you contribute to your retirement there. You're able to pull it out and put it into a different account. It's fairly complicated, all of this accounting stuff, but yeah, it depends on your company.
Wow. Wow. Okay, let's go to question number two. So the question is, what if I'm living in Louisiana and I move to New York and I work in New York, but I owe in Louisiana? Why do I owe the state of Louisiana?
Because where you live,
So I used to live there and then I moved to New York and I worked in New York. So shouldn't it be impossible to owe in my previous state?
it depends on the year. If you lived in that state in the same year, then you're going to have to pay taxes for the portion of time that you lived in that state.
So what if I paid what if I've already paid taxes? Why do I still owe in this state?
Well, you have to pay taxes where you live as well as where you work. Um, Magaly, you want to explain?
Magali, you work, so are we filing in two different states? Or do I need to file in the previous state, or what should I do? Magali is saying, let's say someone lives here for a certain amount of months in the year and they're moving all over. They have to pay that state for that year. It doesn't matter where they currently live. Roxanne is saying,
Deductions.
Magali is saying, yes, the income tax for that state. So if that state didn't have income tax and now your current state has income tax, then you could owe taxes in your current state. So it depends what states we're talking about. So if you move to New York from Louisiana, their state tax is, uh, and you're moving in the same year and you're working, you will have two state taxes. So you could pay in your previous state and still owe for the new state.
I also wanted to mention that 1099 NEC, if you hadn't paid and you moved to a different state, you're still going to owe from where you earned that money at.
Okay, so we're talking about deductions now. Does it benefit me to save though? So if I have a deduction and I receive a large sum of money, what should I do with that? Do y'all understand the question?
I'm trying to remember.
I'm talking about a large sum of money.
Yeah, I haven't had this happen recently. I'm not sure. Magaly or Masha, no?
Anyone know the answer to this question?
Huh. Yeah, I don't know now.
Roxanne is saying, I'm wondering why this question came up. Maybe if it's related to COVID? Ah, okay, let's go to the next question. So, what is the difference between marginal tax rate and effective tax rate? Why is it good? And why is effective tax rate lower than marginal tax rate?
Honestly, that's not my area of expertise.
Magali agrees. I agree. I have no comment on that. Roxanne is asking, anyone know effective tax rate and marginal tax rate?
I mean, it has nothing to do with the IRS. It's more like something else having to do with loans or something. I don't know. It's not the IRS.
Roxanne says, okay, I was just wondering. Let's go to the next question. Can married couple file as head of household if it helps get more refund compared
Mm-mm,
to filing as married
mm-mm.
jointly?
Yeah, you can't do
No?
that. Head of household is for single, not for if you're married. If you are married, if you are legally married, then you are married and you need to file jointly. Unless you are separated, then you can do married filing separate. Yeah, you can't be head of household as a married person to try to save on taxes. You'll get in trouble. You will get in trouble. Don't do that. Don't do that.
Okay, did you all see that? That's a no-no. Save your necks. Don't do it. Don't do it. Don't get in trouble. Everyone here got that? Okay, perfect. Next question. So we have a receipt. Do I really need to keep that receipt or can I just follow and track online? Can I throw the paper away and just follow my online bank? Or is it necessary to keep the hard copy of the receipt?
Okay, okay. Just sorry to interrupt you. Um, that it is the taxpayer's responsibility to have records. You can go off of your notes. You need to like total them. But if the IRS comes back to you and says, "Hey, we're auditing you. We need to have this information," you need to have the records.
Really?
Yeah, you're gonna want to total it yourself and keep the receipts. I mean, other ladies, what do you think?
Magali says, I agree. You can have an electronic version, but you still need to keep those other copies. Save them. The physical paper is good to keep. You can also scan them and have them available electronically.
You also should save it for 8 to 10 years before you get rid of them. Yeah, I know. It's so that if you get audited,
Roxanne says, you're right. Okay, let's get ready to wrap up. Let's thank you so much for your responses. Next slide, please. So, we want to take the opportunity to thank you three for joining us and for the amazing discussion. We want more, but time does not permit. So, I want to wrap up by thanking you. Thank you, CSD Learns, for hosting this topic and Wells Fargo Foundation for sponsoring this event. If it were not for you all, we would not be here. So thank you, Wells Fargo, for this. We appreciate you. Now, for those of you who will be joining our discussion on real estate, we look forward to seeing you next Tuesday. And for those who are watching, come back again. Next slide. And we're done. Thank you so much for all of you who joined us. We hope you enjoyed the discussion.